Hey everybody, good morning. How are you? I hope you had an awesome weekend. 3-day weekend for us here in the United States. 2-day weekend, normal weekend for everybody in the UK and other countries. Hope everybody had a safe weekend. We had quite a bit of rain here in South Florida again, but we got some barbecuing in. Hope everybody got the chance to recharge. So today we got a lot to cover. We're actually going to talk about the jobs number that came out on Friday, whether or not that was a good opportunity to buy stocks. It was actually not a good number by any stretch of the imagination. And the market actually caught a bid right away. So we're actually going to talk about that as well. So I just got to post this for 1 second. So stick around. I'll be back in just 1 minute. Okay, so as with everything that we discuss every day when we do the live streams, everything is for educational purposes. It's up to you to make that final decision. Hopefully, my mission, which is to help you make better decisions or decisions with conviction, is what we're all about here. So first, I want to say hello to everybody. A few people. Let's see. We got Guy. Always good to see you. Good morning. Petrol. Awesome. Every day. I love to see that. I want you to know how much I appreciate that. Joe. Good morning. Good morning. Let's see. I want to make sure I say that correctly. Is that Johan? Johan or Johan? I'm going to say that's Johan. I'm going to go out on a limb and say that's Johan. Good morning, Johan. Thank you. Let's see. Hey, John, good morning. Oh, you got a submarine there. I like it. I like it. I like it. All right. Jason Miller, good morning. Always good to see you, pal. Really appreciate it. Let's see. Foolish Niles. Is that Niles from Frasier? That was a funny show. Bob Burns, good morning, Bob. Fort Myers. All right. We're both Floridians. Like to see it. Andrew, good morning. Good morning. Got a little Netflix thing going in. Is that Marvel? Yeah, I'm a big Marvel guy too. We actually downstairs in our den, we actually have a full room of graphic novels. And my wife actually has I wouldn't even say comic book collection. She's all DC. I'm Marvel. But when I say, I wouldn't say comic book collection, she basically owns a comic book store. She's got so many more DC comics down there. Let's see. Catherine Goodson. Good morning. Good morning, Catherine. Good questions on the coaching call last week. That was excellent. Minvai. Good morning. How are you, pal? Let's see. Andrew, woke up early enough this time. All right. Maybe we'll have a Stock Trading Pro alarm clock app that sets the for the stocks for breakfast. Let's see. Beat Jungo. Good morning from Switzerland. Again, so grateful from the other side of the world. It's just amazing. James from Maine. Good morning. Good morning. Let's see. Rita. Good morning. How are you? No name. How are you? Good morning. Let's see. Chad Musk. Thank you so much. Chad Mack. Excuse me. Thank you for joining. Let's see. Joe Fort Myers also. Okay, cool. Saturn is a myth. All right. Morning from Colorado. I've never been to Colorado, but I hear Colorado is absolutely gorgeous. Andrew is with my wife. He's a DC person as well. I'm telling you, she's got how many? At least 1,000? More. Maybe 1,500 comics. Now they're in the air conditioning, so I feel better about that now. No. Actually, Alexa, it's on the first floor. We're actually on the second floor. We had them in the garage for a while. That was actually scary because it's so hot down here. Let's see, Gus from the Bay Area. All right, so Gus, you too. You're up super early too at 4:30 in the morning. I don't know what to say other than thank you. Hopefully, I'll make it worth your time today. John Weinberg, always good to see you, pal. Thanks so much for being here, and really thank you so much for being a part of our community. Jason the Great. Good afternoon from Moscow. We are everywhere. This is awesome. Awesome. You have no idea how much I appreciate it. Istanbul. Good morning, Ganka Kaya. Again, thank you so much for being here. We're going to make it worth your time today. We have a bunch of good stuff today. Yes, actually, that is a very good point that Ross Marshall just pointed out. And that is what happens when you do stuff in the midst of a long 3-day weekend. I have today's stocks for breakfast listed as August 7th, 2021. Obviously, today is September 7th. So thank you so much for that, Ross. That is why you need an editor. All right. Today we're going to talk about, hey, David, good morning. Tennessee. We actually might visit Tennessee. I'll let you know. So what we're going to talk about today, we're going to start out with some news. We're actually going to segue into something we mentioned this morning about Let me see if I can actually fix that on the fly. We're actually going to talk about risk reward today. I don't think that enough traders spend time. I don't think they spend enough time on profit targets, and that's one of the things we're going to talk about today. I think a lot of trading comes down to you understand the hardest part of trading, which is finding good ideas. Hopefully you do. If you don't, order flow is the biggest thing that we do. If you want to learn about that, click down in the description. PD Legend, true story. I use Finviz every single day. When I had my trading firm, Keystone Trading in New York City, PD Legend is the man who introduced me to Finviz, and that was probably 2007, probably around 2007. So thank you so much for that. I use it every single day in everything we do. So again, we want to talk about, we know how to find an idea. If you don't, order flow is how we do it. Everybody understands how to place a stop loss. So you got the two parts of the trade down where you're looking at the entry or the idea. You find your entry, and then you have your stop loss, and like, okay, great. Here's the part that most traders miss. Most traders miss setting up that mystical risk reward potential before you buy a stock, and it really comes down to this. And this is not talked about enough. I'm telling you, I've been doing this a long time. Is taking the risk worth it? That's again, I'm going to keep pointing this out every single day. Make sure you have your Post-it pads ready because you want to put these all around your monitors. Your job as a trader is to determine if the risk is worth it. So you have to build that argument, which again, the second part of order flow is understanding how to read the tape, is you need to build the argument for whether or not it's worth accepting risk. And there's a very big thing that I just said that I just kind of like slipped in there, but it's something, again, you need to write that down. Taking risk and accepting risk is not the same thing. I know it sounds like a little tiny thing, but I want to ask you right now, and do me a favor, just type this into the chat because I want everybody to tell the truth. Type in yes if you've ever moved your stop loss just as it was about to get hit. I'll type in yes because I've definitely done that, and it's not a good thing to do, which is what we're going to talk about right now. So as you type in there, yes, you've actually moved your stop loss just as it was about to get hit. I've definitely done it. So here's the distinction I want to make: taking risk versus accepting risk. Taking risk means you put on a trade and you never actually expect it to move against you, and then when it does get down to that spot where you're about to get stopped out, you're like, I'm just going to give it another nickel. I'm just going to give it another 50 cents. I'm just going to give it another $1. And that is a gigantic mistake, because if we want to be consistent, if we want to see our trading account grow month after month after month, which that's a big thing too. It doesn't have to be every trade every day. Month after month is our goal. We need to accept the fact that risk is part of what we do. And if a trade gets down to our stop loss area, we have to get out immediately if it hits that level, and then simply look for another spot to get back. So I want you to write that down. Again, that's a Post-it pad thing. Am I taking risk or accepting risk? Because once you have your stop loss in there and the trade is playing itself out, if it should happen to move against you, you need to keep those small losses reasonable. Again, I've mentioned it a few times. I thought myself and a lot of other traders thought that the month of August was a little bit challenging for getting follow through, but that's actually what we're going to talk about right now. So you keep those losses small, you keep them acceptable, but that only works. And this is kind of what we're known for. We're known for, and Brian Rosenberg, one of the members of our community on our swing trade call on Sunday, asked a really good question about follow through and the amount of stocks that have been not following through to profit targets. And that's really more a function of the current market conditions than it is doing something quote unquote wrong. So now we're going to talk about the other side of the trade, which I think a lot of people are afraid to do and maybe don't have the absolute positive confidence in doing it. And I'm telling you right now, you need to step out of your comfort zone and you need to start doing this, because there's actually two parts to, well, we actually talked about it a couple of weeks ago. Number one is, what type of profits are you after? That's a big thing. Okay, so I'm actually gonna drag this in here, and we're gonna talk about it. We're gonna use a fancy notepad. We'll actually put this up over here. So we've talked in the past about being a momentum trader versus a trend trader. And we got some good questions about that. What does it actually mean? So let me actually make that bigger. You might not be able to see that. Let me zoom that out. Okay, that's probably a little better. So I want you to think about this right now. The two different types of traders that are active traders, somebody who's looking for the next move, whether that next move is an hour, if you're a day trader, or the next move of 7 or 10 days, which could be a swing trader. What do you do when your stock pauses? What is your trading game plan? So let me actually make this a little bit bigger so it's easier to see. What is in your trading game plan when you buy a stock, it moves in your favor, and then it pauses? Do you look to exit when that stock pauses, or do you look for that stock to pause and then you look to add? Actually, if you could just do me a favor, identify yourself right now in the chat. If you could please just go in there and say, which are you? Do you consider yourself a momentum trader where you exit into when your stock slows down, or are you looking to add when your stock slows down? Let me know which one of those you are. Let's see. Napoleon Fuentes Rivera from Washington, D.C. Good morning, Napoleon. Thanks so much for joining us today. I really appreciate it. Let's see. James Daniel been stopped out and then watch the stock reverse. Go to the profit target. Okay, James, I'm actually going to touch on that. That is actually a huge, huge thing. Okay. Okay, so Foolish Niles, momentum. Catherine would identify as momentum also. And let's see. Jason, I'm supposed to add. Okay. So we got a bunch of them here. Let's see. Bob Burns, trend, and then add. David looking to add. Now, I can't even tell you how important it is to actually do what you say. All right. More of a trend trader. Okay, Guy. Let's see. John Lash, exit into a pause. So that's momentum trading. Excellent. All right. PD Legend, also same thing. Petrol, what do you got? Sometimes I add to the position when it slows down. Okay, so that's actually an important part there as well. Sometimes I add to a position when it slows down. You need to know the distinction of when you would add versus when you would hold. So we're actually going to touch on that for a brief second. Okay. Let's see. Rick Soder, momentum. Joe Toothman, a little bit of both. So actually what I'm going to talk about right now is a market internal indicator. So we're actually going to talk about, if you happen to not use it, something I'm going to put out there right now is the New York Stock Exchange tick indicator. And I want to address something that was just said by Petrol, and I'm going to get to a different point in a second. Sometimes I add to a position when it slows down. So that sometimes part needs to be really dialed in. You need to do the same thing all the time under certain conditions. So we watch the New York Stock Exchange tick, and especially on the day trading side of things, this is really more it's important, but I want to really drill the point home that you really need to know the market conditions. So the New York Stock Exchange tick indicator, especially for day trades, there's a zero line. And essentially what it measures, it's very similar to the breadth indicator, but it's more of a momentum indicator. And it's really more of a market bias indicator. So if you can imagine zero, that means that at that moment, there's no stocks ticking up or down in a big way. Then you have plus 500 or minus 500. So plus 500 means in that moment, and we usually watch this on a 5-minute chart, plus 500 means at that moment, 500 more stocks are upticking versus downticking. So plus 500 or minus 500. So again, you want to write this down. If the market and the New York Stock Exchange tick indicator is stuck between plus and minus 500, institutions are not stepping up and doing something significant. So that means that you're in that little window there. And getting back to Petrol's point, that's a situation or a scenario where if you're a day trader, you'd be a little bit more likely to be exiting into momentum because there isn't a bigger picture bias there right now. Now, you could drill a little bit deeper, and that might change if you look over and the whole sector is strong. So let's say maybe all the cannabis stocks or all of the solar stocks or all the semiconductor stocks, that kind of changes it. And remember, that's our job, is to add that argument, build that argument to determine how long we should be holding it. So the tick is one thing. However, I want to scroll up here just a little bit. Let me just see if I can find it, because this is a critical part of trading. And it's a quote here by James Daniel. Been stopped out and then watched the stock reverse to go to the profit target. I thought it was. Raise your hand if that's happened to you as well. Happened to me a lot early in my career. And actually what I would end up doing is I would trade something and I put it in my game plan and I'd put the trade on, and whether the trade worked out or not, I'd go to a different stock and be like, okay, that trade's over. Let me go find a different one because you have a big list of stocks in your game plan. But let's take this one because this is one that this is one that hits the guts a lot, which is you did all the homework to find the idea. The idea unfolds. You bought the stock, fluctuates a little bit, stops you out. You get out of the trade, and then it does exactly what you thought it was going to do. Happened to me a lot early in my career, not anymore. So James and everybody else, I'm actually going to pull this up on the screen just a little bit bigger. Let me actually get this out of the equation here for a second. So let's just say, for argument's sake, we're trading. It doesn't really matter what stock. Let's just use the SPY as an example. Let's say, for argument's sake, you bought the SPY up here, and I'm going to leave this on the screen because it's an important part. Let's just say, for argument's sake, you were trading the SPY on Friday, you were day trading it, and let's just say, for argument's sake, you bought this breakout and it came right back in, and you're like, stopped out, Raza XO SPY. I hate the SPY, right? So what do? You have to get to the point. We say, how much do I love this idea? Did that particular trade get stopped out, or is the idea no longer valid? As long as the order flow is still valid, as long as the monthly, weekly, daily, hourly order flow is still valid, and maybe just that idea gets stopped out, it is critical. I can't write this down any more emphatically. Again, I always say this every call, but if you take nothing else out of this call, this is the thing to take out of this call. It is critical that if all of the conditions are still valid for your idea and you got stopped out, it is critical that you set an alert immediately at the price that you still like that trade. So in this case here, you can see we're basically looking at just below 453. So the thing dancing around, dancing around, dancing around. As soon as you get out of that trade, if you still like the idea, it's critical. You go into your software. Let me actually make this a little bigger so I show you how to do it on TradingView. You basically right-click on the chart and you set an alert. So you get right back in there and you put the price crossing up, and you make sure that you have a pop-up, an alert, everything that comes out so that when it gets back up there, you participate in the next move. I'll give you a little bit of a little phrase from the entrepreneurial world, which is the fortune's in the follow-up, and same exact thing in trading. The fortune is in the follow-up. You did all that homework. The market closes at 4:30 in the afternoon, 4 o'clock in the afternoon. And you have all that time between 4 o'clock and 9:30 the next day. You did all of that work. I think that's 17 and a half hours or whatever it happens to be. Friday to Monday, whatever it happens to be. However long you do your game plan, you did all that work, get paid. Get paid from all that work that you did. You owe it to yourself to stick with that stock. Getting stopped out on one trade does not matter. It's a part of what we do, which is actually going to talk about that in a second. But does everybody understand that? Write this down. Get in the habit of setting alerts after getting stopped out. It is a critical part of getting paid on good ideas that you found after you get stopped out. And quite honestly, an advanced way of doing this, and this is something we talk about a lot. If you've been trading for a while, this is the way I do it, and this is probably the way that any experienced trader does it. Newer traders who are still getting used to watching all the information, that kind of stuff, set an alert and then reevaluate the trade if it gets back up to that spot. However, if you're an experienced trader, we'll put 100 share buy stop up at that price just so that the order gets put back into our position summary. It's an initial entry. It's far from our full share size. Obviously, 100 is just the first piece. Now it's in your position summary and you're watching that stock and it rallies up a little bit and pulls back 20 cents. Just for example, rallies back up again and now pulls back 10 cents and goes slightly positive. So now because you're reading that stock and you're reading the tape in that stock, you know that stock better than anybody because you have a position. It doesn't matter if it's 5 shares, 100 shares, or whatever the number is. It's critical you have to do that. Obviously, the type of order, something we discussed last week, you can use a buy stop limit order or a buy stop market order. I tend to use buy stop limit orders for those kind of things because if the stock is all of a sudden takes off, I don't want to get a really crappy price. So I usually put a buy stop and my stop limit price 5 cents apart. So there's the buy stop that sends the order out, and then my limit order is usually 5 cents above that. So just using round numbers, let's say for argument's sake, the stop order is so stock is trading at 49.50, and I have the buy stop at 50. That trades up to 50. The buy stop triggers, but then I have a buy stop limit order for 50.05. So if it goes up there, I'll get printed within that 5 cent window, but but I can't get worse, which means that's not a market order. So that's you might want to watch that section again. That's a pretty important one, the different types of orders to use. And that's a really ninja advanced way of using stop orders. Most people make the mistake to put them at the same price, and you end up missing out on good trades. Okay. Let's see. Joseph, good morning. Good morning. Thanks for joining us, pal. Really appreciate it. Let's see. Stops are killers. No stop is a killer. Yeah, Charles, not even a question. I can't even tell you the amount of people I've seen over the years that refused to use a stop and blew up their account because they didn't use a stop. Let's see. Do you post your stop loss in your software or write it down and watch the set? No, it's always posted. As soon as I put a trade on, the stop is in immediately. Again, that's getting back to the point of how many trades how many positions are you trading? I'm a big advocate. Again, if we get into the process of making money, you have to think about your trading strategy, your edge, as it makes money over a large sample size. We use the example of 10 perfect trades. If you do everything you're supposed to over 10 perfect trades, taking losses where you're supposed to, understanding how to hold the profit target, the losses don't matter. What matters is learning how to make more on the upside. And we're going to talk about the risk, the reward part in a second. By the way, before we actually get into, we're actually 20 minutes into the call already. Some of the stocks, I want to actually just point these out so that we have them on the radar today. Some of the stocks I'm going to be focusing on today, let's call them the quote unquote gaming stocks. So DraftKings, which you can see actually rallied up to this breakout level. Penn National Gaming also had a nice push and then went into kind of a pause during the week, but you can see it's resting right at this breakout level. Some of these stocks, and especially CZR, had that deal with ESPN, so we're looking to see if this holds the bid. I know it's opening up a little bit lower this morning. And Match.com. These are going to be a part of the game plan this morning. Match.com is actually up 11% at this point. It was up 12 and something before, but I just wanted to make sure I threw that out there as something that is going to be in play today. One other one in play as well, CRM traded into what we call a bullish U-turn on Friday, which means it traded lower, reversed, and closed strong. So I just want to give everybody a heads up on some ideas that we're going to be watching this morning. So Val, very important, and just so everybody can benefit from Val's Minvi's question, I always put the stop in there because I don't care if I get stopped out. It's a part of what we do. You have to allow the trade to play itself out. It's not a big deal. It's not an assault to your ego. It doesn't mean your trading strategy doesn't work. It means that moment in time it traded down. You know, it's funny. We if we look at the 5-minute candlesticks, we have this saying in our community, and probably this candlestick right here is the poster child for it. Maybe we could even find a better one, but we'll use that one as an example. And it's probably a really good example. And we call it the FU candlestick. I'm not gonna say what FU means. I think everybody understands what FU means. But it's one of those candlesticks where you have your stop loss in there, and you're doing everything right, and you get this one big giant candlestick that goes straight down, and you're like, happens to everybody. If your stop's in the right spot, it shouldn't hit you, but you kind of like wake up and you get a little bit anxious. Those FU candlesticks are the reasons you need to stay in there, because that one candlestick doesn't change the whole argument. So you need to keep that big part in context. But I want to get back to what I was talking about before, which is really diving deeper into, we have the risk part of the trade, and we have the reward part of the trade. So the first part of the trade is easy. The risk part is, there's my entry, there's my stop loss, right? You know what the downside of the trade is, and we just kind of talked a lot about that, right? But what about the reward side? Everybody knows the math, and I think John A. typed it in there before. Everybody knows that 3-to-1 risk reward is kind of the classic level, right? The classic level. And actually, I'm going to touch on this as well. Do you use trailing stops at all? 100% foolish, Niles, 100%. We're actually going to talk about that in a second. So when we know the risk that we're willing to take on the trade, and if time-tested 100 years, that 3-to-1 makes it worth it. And everybody knows the math. If you earn 3 and risk 1, you can have a 30% win-loss percentage and still, worst-case scenario, break even. So just let those numbers sink in for a second. The challenge is, how do you make more? So if we go back to understanding risk, that means that we justified the risk in the first place. So what does that mean? That means that we built an argument for what we call the stock market power pyramid, which is the general market, like John A. types in here every morning, the big three, the NASDAQ, the New York, the NASDAQ, the Dow, and the S&P 500. Then above that is a layer of the sectors that we talk about every day. And again, this is a big part of what we do every single day, right? Breaking down the sectors. So you have the market, the sectors, then you have the industry groups, and then you have the individual stock. So once we do our job of building that argument for accepting risk, then it really comes down to what is an acceptable reward for taking that risk. And what we just talked about, the stock market power pyramid, is how we build that argument. But at its base level, how do you set a target? How do you justify taking that risk? And I'm just going to use simple numbers, okay? So let's say that you have the market on your side, the sector's on your side. You built an argument. You're like, yes, I really think that there's a good chance of this going up. And this is something that I want you to write down, because we get a lot of questions about how do you build that argument? Like, what is the context of the argument? And the argument is really simple. What are the odds of my profit target being hit versus my stop loss? Stop making trading complicated. It really comes down to that. If you understand this basic math of 3 to 1, understand accepting risk, understand building the argument with that question in mind. What are the odds of my profit target being hit versus my stop loss? Now, there's a critical point that I want to get across here, and I want to write this down. And we talk about this every day in our community. Let me zoom that out a little bit for you. Initial profit target. The initial profit target is the realistic target that you believe you're going to hit in exchange for the risk. So what I want to give you right now is what's on the screen already. It's probably one of the most simple things you could possibly do. And it's also going to get back into the question that Niles asked there before about a trailing stop loss. An initial profit target, keeping with the basic math of your goal is to make loss, the emotional impact, the negative emotional impact of trading losses vanish. And the only way to do that is to keep your losses reasonable. And the other side of that is to make what you're supposed to for taking that risk. So when you buy stock, you have to say, okay, I'm comfortable with this because of everything we just mentioned. What most traders don't do, and they don't make the separation, is if I'm risking $1, that means my initial profit target for accepting risk on this trade needs to be at least 3. Again, you probably want to watch this another time because it's kind of advanced stuff, but it's advanced basic stuff. And that's your initial profit target. That is you saying, okay, if I risk $1, if I buy at 50, my stop loss is 49. What are the odds of that stock getting to 53 as my initial profit target? And I'm just using those numbers as an example. Once you have your initial profit target and you built that argument for the trade, you have to have the guts now to say, that's my first target. And it's very carefully worded to say initial profit target. That's not all we're trying to make. You need to understand that this is what justifies accepting the risk, meaning that you built the argument that you believe that $3 is very realistic that your profit target has a much better chance of getting hit than your stop loss. Doesn't mean it always will. It means that over a large sample, the odds are in your favor from the order flow, from reading the tape, from the sector rotation, from the market, from the industry group, and the volume in that stock during that day. That's the initial profit target. Now, here's the part where big wins are lost, like into the Bermuda Triangle. Once you have your risk, once you have your initial profit target, and trust me when I tell you, there's a little negative Nancy in your head right now saying it can't be that easy. I'm telling you, it is that easy. If you're willing to accept that risk, how does it not make sense to say, well, I need to earn at least this much to justify putting on this trade? Once you justify putting on that trade, now you have your initial profit target. And here's the thing. If you know the turtle traders or any bigger trend trading type of scenario, or momentum trading, it really depends on the time frame that you're gauging your stock. Now you need to shift from initial profit targets. Let's say it goes from 50 to 53.25. Now it hit your target. Now you need to shift into trailing stop loss mode, which is how much are you willing to take on the downside minimum if that thing turns around? Are you willing to give back unrealized profits in exchange for a much bigger move? Are you exiting immediately into your 3-to-1 target? Are you scaling out of half and letting the balance run? And then you shift into a trailing stop loss mode. For newer traders, I would suggest that's what most people do at the beginning, because you're booking some profits on the first piece at your initial target, and then you're allowing yourself to develop the habit of learning to hold. I think in the long run, you want to hold as much of it as possible, because you want to make sure that you have bigger wins when you got them, when you're right, when you got that fish on the line. But then you need to have some sort of trailing stop loss mode to determine whether or not that has now reversed and you should be exiting. All bigger winners very rarely get out exactly at the top going up. It's usually you let it go up and fluctuate, let it go up and fluctuate. And at some point you get taken out on the downside, but much higher as it pushes and pauses, pushes and pauses. That's why that was one of the first things we talked about today. So it could be a moving average. It could be a stochastic crossover to the downside on your entry time frame. It could be MACD crossover. For me personally, I like simple moving averages, and I like candlesticks in multiple time frames. But which one you use doesn't matter. What's important is that you make the distinction between initial profit target and understanding when to use a trailing stop loss. I know some people use a percentage trailing stop loss and that kind of thing. And quite honestly, it really doesn't matter which one you use. But it's critical that you pick one and you use the same one all the time, because it's very challenging to use one here and use one here. Whatever it is, keep it the same. So I just want to recap this because it's really, really important. Hey, David, I'll speak to you soon. Take care, pal. Thank you so much for being here with us today. So I just want to go over this again. Identifying what kind of trader you are. We use the New York Stock Exchange tick as an example of when to trade bigger and hold. We talked about risk reward and the accepting risk versus taking risk. We talked about the fact that you have to have the guts to set a profit target. We call that initial profit target as the first place that justifies accepting the risk. And then you need to shift into trailing stop loss mode once you've achieved your initial profit target. And then we broke that down into a even deeper, do you scale out or add? These are things that everybody really needs to have in their trading plan. These are things you need to think through well before the market opens. It is critical to understanding how to make reliable, consistent money. And the biggest thing I want to get across here, which is, I think it's critical. Look, we all hate trading losses. They're all annoying. They get under your skin and it makes you doubt yourself. Once you understand what we just discussed today, and again, you're not going to understand it the first time. It takes a while, because then you have to really learn how to manage what happens between entry and exit, right? We could all get in at the same spot and have 500 different exits. But once you understand this concept and you're trading for a while and you start to understand, okay, I'm okay with risk. Risk is a business expense. I accept risk. If it goes down to that spot, I'm okay, because I'll just make it back on the next trade, or I'll make it back today, or I'll make it back this week. That's the way professional traders think. Then you need to get to the point where you understand how and when to make more on your winning trades. It could be more share size. It could be holding longer. It could be more positions. Sometimes it could be all three of those, but you really need to understand the conditions of when to do that. So today was all about risk reward, profit targets, having the guts to put out the right profit target, and managing your trade. Because think about this. If you put the trade on and say, I'm just going to put it on and I hope it moves in my favor, or it's just going to move in my favor and I'll deal with it later, then you don't have any context for the trade. That's like just driving and having no idea where you're going. I just want to keep going until my gas runs out. That's not healthy. That's not healthy. You need to have some target. And again, you're not limiting your profits. You're setting an initial target to justify the risk, for justifying taking the trade. Okay. I just want to get into a couple of other things that were important from this morning. Some news, some headlines from today. I want to make sure that we discuss them. Obviously, the U.S. hiring slowed in August. That's a big deal. We fully expected the market to sell off on Friday. It did not. Shocking, I think, pretty much everybody. We opened here, pushed down lower, and caught a bid again. That big blue line is still pointing higher. Kathy Wood continues to pound the table on her Tesla prognostication, putting a $3,000 number on there. Tesla is actually sitting at a big breakout level that we spoke about last week. Bitcoin, for those of you trading Bitcoin or anything Bitcoin related, El Salvador, I think they said they bought 200 more coins over the weekend, and that actually pushed it up to, if I'm not mistaken, it pushed it over 52,000 over the weekend, for those of you that are in there. Yep, they went up to actually over 53,000. It's trading back down now. So Bitcoin and anything else that is Bitcoin related is going to be pretty volatile today. Big story about NIO here this morning, rumored to launch another sedan early next year. Those are like Chinese electric vehicle stocks. Really, any Chinese stocks right now have been beat up, but these are mostly day trade mode for me right now. And Boeing lost a big customer over the weekend too. That's a big deal. So we might get some good day trading volatility out of Boeing today as well. Let's see, Abe. What is the New York Stock Exchange tick? Abe, you know, it's actually interesting. It is different on different software. So whatever software you're using, you might want to type into their help desk or reach out to their support. I know on this software, I think it's just tick, and we use the New York Stock Exchange tick, cumulative tick. There's also one for NASDAQ. You could use different ones. So that's actually what it looks like. So if you can imagine, that's the zero line, plus 500 and negative 500. So you can see it was kind of nondescript on Friday. It really wasn't all over the place. So let's see. Joe is saying TOS is tick. Okay. So no, I think, thank you for that, Joseph. I think on TradeStation, it's $ tick, if I'm not mistaken, $TICK. Let's see. Minvi sent an email. Oh, okay. Awesome. Awesome. Looking forward to seeing you. Let's see. Bought Roku at the day's low, added second position. Okay. Yeah. I'll tell you what, Petro, Roku is definitely one of those stocks to have in your game plan every day. It's a really good stock, has good volatility. Cool idea to switch to trailing stop. Okay. Awesome, John. Excellent. Excellent. And Abe. Okay. Yeah, Abe, it's interesting. You would think that everybody would have the same, indicator, or symbol, but it's almost different for every software. All right. So I actually have to head over to our, private game plan meeting for our bootcamp community. So I'm going to head over to that meeting now. I want to thank you. Please do me a favor, click down and subscribe if you find these videos helpful. Every Monday through Friday at 7:30 a.m. is when we have these calls. I'd love to see you here with me. One thing I'd like to ask, obviously click down and subscribe, smash that like button. But more importantly, I want to keep helping you. So two things. Number one, if you have questions during these videos and during the live streams, absolutely make sure you ask them while we're live, because they're kind of cool to have the back and forth. And number two, definitely leave a comment below the video. Any questions or anything we talked about today, you want to get a little bit more detail, leave a comment with a question, and I'll get back to you as soon as I can. And if you want to learn about getting into those private game plan meetings, which we have every day at 8:30, look in the description below the video. I'd love to see you on the other side as well. Thank you so much, everybody. Have an awesome, awesome day. Short week. It's already Tuesday. Let's go get them today. Have a great day. And thank you so much for joining me. I really appreciate it.